Hey, welcome back to Everyday Economics. The podcast helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, CEO of the 501c3 nonprofit, nonpartisan Franklin News Foundation. Everyday Economics is a production of America's Talking Network. You can hear all of our podcasts at americastalking.com. To support podcasts such as this one, please make a tax-deductible charitable contribution by clicking the link in the show description. We're recording this episode on Thursday, October 3rd. And joining me as always, my friend and colleague, Dr. Orphe Divounguy, PhD economist, live from the Delta Sky Lounge in Seattle Tacoma Airport. Dr. O, thank you for the effort. You and I are both road warriors this week and grinding our way in different places. I'm in Philadelphia. You're back in Seattle after, I don't know, how many times have you been to Las Vegas this year?
4 or 5 times this year.
Yeah,
it's a lot of travel, but you know what? We're still making time for our listeners, and I love it. I love coming back to the Everyday Economics podcast to talk about what's going on and make sure people are paying attention. So make sure, by the way, guys, make sure to send us your questions, comments. Don't hesitate to reach out to our team.
Love to hear from people. And we do get, we get tips and suggestions all the time, and questions. The show that we're working on right now, I think, is the product of a conversation that you and I have had ongoing. It's time for the way too early 2025 state of the housing industry conversation. We want to be first in market with that. So
absolutely.
So from an let's just couch this right off the bat. You know, there's a fairly significant event scheduled for November 5th, where the United States is gonna select a new president. Democrat Kamala Harris, she has some ideas. Republican Donald Trump, he has some ideas, and depending on who comes out on top, we'll have some say in the future, the near future of the housing market. But the reality of it is, right now, one thing that I think all Americans can agree upon, and it sounds like Congress is finally, the political class has finally caught on to this, that there is, and I'm not talking about the people that are running for president. I'm talking about the DC.
That's right.
It's finally caught on to the reality that we're short on housing in this country.
Oh, thank God. Thank God that people are focusing on housing affordability finally, right? We're talking about housing affordability. People realize there's a massive housing shortage across the country. I've written extensively on the topic. I've estimated we're short roughly 4.5 million homes.
Every time I talk to you, that number gets bigger.
Yeah, because you know what? Think about it. In 2023, we built roughly 1.6 million homes. And that's just nothing compared to where the deficit was.
Yeah.
And at the same time, we've had population growth, right? We continue to see more and more people coming into this country. We have an increase in the number of families coming into the United States. And so our builders need to be able to keep up. And the only way builders will keep up is if we deregulate a little bit more, right? Especially at the local level, get rid of these little barriers to building, like minimum parking requirements, trying to decide the heights of buildings, etc. Let the experts be the experts, and builders know what they're doing. So, but anyway, you're right. We have this election coming up, but here's what I have to say: what are the determinants of housing demand? Incomes, right? Adjusted for inflation, right?
Correct.
Incomes
note there.
That's right. Incomes adjusted for inflation. And also mortgage rates, right? So in the for sale market, those are the things that really, really impact whether people are going to move and whether we're going to see an increase in home sales in 2025. Historically, elections have very little impact, right? So it's a little blip. People stop a little bit before the election. Then when they realize everything's fine, they go back out in droves and continue with their life decisions, right? And so that's usually how elections have affect the housing market. Now, in terms of policy, first of all, I'm going to say it again because I think it's important. I'm so pleased to see that both political parties are talking about housing affordability again. That's
Yeah.
great, right? It's so important to the well-being of the U.S. economy because housing happens to be the biggest expense on families' budgets, monthly budgets. The biggest expense, it's 42% of core CPI, right? So it's so important to the US economy. And in terms of policy, sadly, both parties, and this is the headwind, right? There's lots of tailwinds. Look, affordability has improved a lot in the past year. Mortgage rates have fallen roughly 1.5 percentage points when compared to a year ago. So the 30-year fixed mortgage rate is down. The typical mortgage payments is also down 3% lower than it was last year. Zillow forecasts that home sales could increase roughly 5 to 6% next year, right? Home values could actually take up a little bit as a result. There could be some demand coming back. Supply could also be coming back. Look, new home sales are already up 10% when compared to a year ago. So you have a lot of positive activity, positive momentum, despite the affordability challenges that people are still facing. Now, the headwind to housing is the fact that fiscal deficits are continuing to rise and are expected to continue to increase. And if we don't get our budgets, our house in order in Washington, D.C., that pressure could turn out to be inflationary and could push rates, at least keep them higher for longer. And that's the problem, right? And so that's what I say when people come and ask me, what's the impact of the election? I say, look, ultimately, it's about what's going to come after. Are we going to get our budgets in order? Are we going to lower fiscal deficits going forward? Or are we going to continue to let them rise and rise and rise because we can't figure out priorities in terms of, at the DC level, budget priorities? I think that's the problem. And the one risk to my positive forecast in the housing market.
Yeah, I think it's interesting. So let me ask you this. I mean, we all, of course, it's DC's an easy target. It's a big target. And, I mean, there's a lot of sentiment that DC very rarely gets it right. How about at the state level? You and I have talked about like the places where people are moving and the opportunities, the building that's occurring, a lot of it being in the Southeast now. Texas continues to grow. And by Southeast, I'm being generous. I'm including the Mid-South, like Tennessee as well. And then certainly there are some places out west where growth continues. Arizona, I mean, the housing growth in Arizona continues to sort of like full steam ahead roll. But what are the implications of state level policy as it pertains to, what could or what could not happen in the year to come?
Well, look, the states are very different one from the other, right? They also have their local, issues. At the federal level, it's usually, you dangle a carrot and say, hey, I'm going to help, we're going to fund project XYZ if you do this other thing here. And that's kind of how the federal government influences state and local activity. And so state and local policy. And so it really is going to depend. I mean, in California, for example, you continue to see higher and higher tax burdens on people, right? Income taxes continue to increase. They increase the tax rate. They say it's temporary and then it sticks, right? They never roll it back. So you have differences across the country like that that are going to influence the outcome. Right. So again, even in the housing market is very local. All housing is local. And so I tell people that it's really important to stay in touch with the data. And I point people to the Zillow data because basically they have 165 million homes across the country and they track basically everything. Right. The platform tracks absolutely everything. And so you want to see what's going on locally. Always think in terms of supply and demand. Start with incomes adjusted for inflation, disposable incomes adjusted for inflation. Why do I add disposable? Because tax rates vary across states.
Oh, wildly.
Exactly. And so whatever you're going to keep in your pocket is going to make a huge difference. And so disposable income adjusted for inflation, but also builder activity. Some states are more highly regulated and prevent builders from building. For example, I just gave a presentation where I showed housing permitting activity in the Seattle metro where I live.
Yeah.
It's been downward trending for years, and permits are roughly 35% below where they were before the pandemic.
Right.
In the Seattle metro, single family permits. That's terrible, right? Something's we got to fix that, right? And I know they're trying to fix it. There's some activity at the state level and local levels to try to fix it.
But is that like NIMBYism, like not in my backyard, or is that just, is there something more to it? I mean, because the type of housing that you're talking about in the Seattle metro area would be higher density housing, simply because that market is just so, it's over. Is it fair to say it's overheated?
Well,
It's expensive.
Well, it's expensive. And most of the city of Seattle is zoned for single family units only.
Right.
And I think that's a problem. Builders, in order to respond to affordability challenges, builders have been building smaller.
Yes.
They've been building attached units, attached single family units, as opposed to detached.
Yes.
They've been building taller. But if you have limits on the types of units you can build, it's going to make it very difficult for builders to build in the area and respond to the challenges.
Mm-hmm.
And so I got to say, though, I think things are moving in the right direction. Even in California, that's known for being super restrictive, you're starting to see a movement at state level, at least, to allow for more construction. So that's the good news, but they're still so far from where we need to be. And if you want to see where we need to be, you look at Texas. Texas is building like crazy. You look at places like Raleigh, North Carolina, where permits are still 11% higher than they were before the pandemic.
Right.
You look at places like that where building activities remains pretty strong.
Mm-hmm.
I like those markets: Raleigh, Charlotte, Nashville. Those are markets that continue to build housing at a pretty rapid pace. And because they build housing at a rapid pace, you're not seeing the type of rapid price growth that you see in places like Seattle.
Right.
Prices in Raleigh, prices are growing at 1.4% higher than they were a year ago, which is good for potential home buyers. It's kind of a balanced market.
It's reasonable. I think
it's reasonable.
That's reasonable. Yeah.
Exactly. And so that's the type of market I would like to be able to see across the country. Market that basically responds to the increase in housing demand by building more, having more activity on the market, a more balanced market where a first-time home buyer might come into the market and buy at a reasonable price and still see some appreciation, right? A moderate appreciation in the years of it. Nothing crazy, nothing unsustainable, that doesn't allow for more people to move into the area.
Yeah. Well, I appreciate your thoughts as always, Dr. Orphe Divounguy. This has been Chris Krug. Subscribe to Everyday Economics at americastalking.com.